Hey everyone, and welcome. Today, we're going to pull back the curtain on American manufacturing by diving deep into the latest earnings report from Rockwell Automation. You can really think of this as a checkup for the entire industrial economy. So yeah, it's a big deal. Let's get right into it.
It's a huge question, and the answer affects just about everything, from the stuff you buy to the overall strength of the economy. Are companies actually investing money to upgrade their assembly lines? Are warehouses getting smarter and more automated? Basically, are they spending on the tech that makes them more competitive?
So to get some real answers, we're going to look at Rockwell. Now, why them? Well, it's simple. Their CEO basically calls them the most used technology in American manufacturing. So when they're doing well, it's a pretty fantastic sign for what's really happening on the ground.
All right, so let's get straight to the headlines. The big news is that Rockwell kicked off their fiscal year with a really strong first quarter. They did much better than all the analysts were predicting.
The one number that everybody watches is earnings per share, or EPS. It's really the key measure of a company's profitability. And Rockwell, they beat the forecast by a solid 29 cents. That's a pretty significant beat, and it for sure got Wall Street's attention.
And what's really impressive here is that they didn't just beat on one thing. They beat expectations across the board. You can see it right here. Revenue came in higher than expected, and that extra revenue flowed right down to a big beat on earnings per share. Just a very solid performance all around.
Okay, so we know the numbers look good, but where did all that strength actually come from? Let's break it down and see which parts of the business were really firing on all cylinders.
This chart tells a fascinating story. Just look at those two bars on the left. That's their intelligent devices and software and control businesses. Both saw incredible double-digit growth. But then, you see that bar on the right, Lifecycle Services? It was actually down. We'll get into why in just a little bit. The real star of the show, though, was clearly software and control. Their main platform, Logix, which is kind of like the central nervous system for a modern factory, saw sales in North America just explode, jumping by more than 25%. That is a massive sign of demand for their tech.
And this growth wasn't just stuck in one little corner of the economy either. Think about the last thing you ordered online. The warehouse it shipped from? It's almost certainly using technology just like Rockwell's. That explains why we're seeing that huge 60% jump in their e-commerce and warehouse business. And it's a similar story for the food and beverage industry and even in sectors like energy.
Let's be honest, in this day and age, you can't talk about a tech company without asking about AI. So how is a 120-year-old industrial giant like Rockwell playing in the AI space? What's their strategy?
It turns out they have a really smart three-part strategy. First, they're baking AI into their products to make them smarter, which in turn helps their customers run more efficiently. Second, the whole AI boom is actually creating more demand for their products because all those new data centers need their industrial tech for power and cooling. And third, they're using AI themselves to make their own operations better. It's a really clever way to play the AI trend from a bunch of different angles.
Okay, now for the twist. Despite that fantastic quarter, the message from Rockwell's leadership wasn't all sunshine and rainbows. They were actually pretty quick to point out some serious challenges up ahead.
This quote from the CEO, Blake Morit, it just perfectly captures the mood. He's basically saying, look, Q1 was great, we know, but it's only one quarter. We are not ready to pop the champagne for the whole year just yet.
So what's got them so cautious? Well, a few things are going on. First, all the global uncertainty out there is making some of their customers really nervous about pulling the trigger on big, expensive projects. That's a huge reason we saw that decline in their lifecycle services business. And then there's a business change with a joint venture that's going to take a bite out of their annual sales. So there are definitely some headwinds they're watching like a hawk. So when they say CapEx on hold, what does that actually mean? Well, imagine you were planning a big kitchen renovation, but then you start hearing whispers about the economy slowing down. You might just decide to put that project on pause for a while, right? That's pretty much what's happening with some of Rockwell's biggest customers. It's a sign that business confidence is just a little shaky right now.
So, you've got this mix of a really strong start, but also a pretty cautious outlook. So what does Rockwell think the rest of the year is going to look like? Let's check out their official guidance.
Okay, so they're actually sticking with their original sales growth forecast, which is interesting, but they did raise their profit forecast, which is definitely a good sign. They also expect to generate a ton of cash and plan to use about $500 million of it to buy back their own stock, which is always something shareholders like to see. But, and this is a critical piece of context, you have to understand why they raised that profit forecast. It wasn't because they think business is suddenly going to get better. Nope. It was actually because of some one-time tax benefits they got in the first quarter. So if you strip that away, the underlying outlook for the business, well, it hasn't really changed at all.
And this second quote from the CEO just sums up the whole report perfectly. After a killer quarter, they easily could have been overly optimistic, right? But instead, they chose to be prudent. They're acknowledging the great results, for sure, but they're also keeping a very, very watchful eye on what looks like a pretty uncertain road ahead.
So, what's the big takeaway from all this? Well, you've got a company that's absolutely firing on all cylinders, yet its leaders are tapping the brakes and urging caution. So is this the quiet before potential storm for the economy, or are they just being smart and laying the foundation for future growth? That is the billion-dollar question right now. Thanks so much for tuning in.